Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market wrap-up for this Thursday, the 13th of July, 2017, about 4:20 p.m. Central Daylight Time. Can you believe it? The Dow Jones again up and another record high. I think that's 24 this year so far that the market's been able to creak out of it. We've got earnings seasons beginning. The bank stocks will come into focus in the morning, so keep your eye on those. But earnings growth is expected to improve here, so let's see what the market gets. The second half of the year is where the market's going to start focusing, and I have not shied away from the idea that the market's going to look on as we come to the end of the summer. And remember, only July 13th. There's time for this. But I think that as you get into the second part of this year, it's going to get very exciting as times get on here. Now, the trade's going to expect a lot from the markets. We'll see if they get to ride it or not. Didn't hurt the markets that Fed Chair Yellen held her course with what she said yesterday. The markets are still pricing in a December rate hike, not a September hike. We'll see if that comes to be. Metals a mixed bag today. The dollar index down a fraction. The strength was seen in the pound. Yen was pretty flat on the day, but the euro backing off a fraction here. Now, as we look at the NASDAQ, we've had a break, and I'll finish up this week, today's trade with that, and tomorrow I'll do for the weekly charts the Dow, because I think we should focus on that again since it's making the new highs. Market's been in a down thrust. We're coming up. You need to close over, let's call it that 5,800 level to negate this current downtrend. You can see how the lift in the market has been taking place this whole week, and the pattern is one of a higher high but a lower low. You haven't really had a lower and low day all week long. Do you see that? So that's been important. The market has stayed over the 18-day average of closes, and because of the V-type move, it wouldn't surprise me if somewhere along the line here it pulls back to that average and tries to get itself, if you will, more tight in a trading range. We seem to be caught between the upper and lower Bollinger Bands. We recently tested the lower band, and the market held it, and now it's pulled away from that. In terms of momentum, you got to be a little nervous here. You're getting now into overbought territory. That's why I'm saying that I wouldn't be surprised if the market somewhere along the line here sets back a little bit towards that 18-day average. But the strength in today's stock indices came from the banking sector and the tech stocks, so this is what's been kicking this market up. When we go to the Dow, there's your highs. Now, as I said yesterday, the question is the market going to have the power to kick this out in a way? You can see how overbought you are. You're not trending. You have a lower low and a higher high pattern, but the bias is up and momentum is up even though it's overbought. That's what's driving that market. The better looking of the charts, and yes, it too is overbought, is the S&P with higher lows and higher highs over the 18-day average. But as I said, it too is overbought. It has managed to widen out slightly its upper Bollinger Band, but overall it stayed in the sideways pattern. It's not any longer had that downside bias. The Russell, as you can see here, like the other indices, knocking on the highs of the recent move. It pulled back today to the 18-day average, held it. Now the question is, can it add a leg to this move or not? In the VIX, the market's got a pattern of lower highs, lower lows, oversold. So it's the flip-flop of what we've got in the stock indices. Do we get a Friday correction, or do the banking stocks come in really good and start kicking these markets higher? We have to wait and see. In the T-bond market, a couple of things. You've got the embedded slow stochastic trade. That is bearish. The market has a pattern of lower highs, lower lows. It's coming into, again, that support at the 100-day average of closes at 151.19. A sign that the market might be ready to bounce the other way would be because you had an outside day down today, taking out today's highs, either on Friday or Monday. Barring that, market stays in a downtrend, and I think it gives the bears cause to protect their short position by selling rallies in that market. In the 10-year note, the market has got a pattern now. If we take a look with today's action, I should have really taken this arrow and had it pointing down here. You've got lower highs and lower lows now, but as you can see, while that's all taking place here, you're oversold. So that keeps you away from this market, not the same as what you've got in the 30-year bond. In the dollar index, you have a market that has got both numbers under 20 today. Now, as we take a look at those numbers for today, yesterday both numbers were not under that. So you're just in an oversold condition in a downtrending market. In the SEP Euro, the important part is here, the market lost its embedded reading on the close today. It had 3 days in a row of both the K and D lines, the red and the blue, staying over 80, and today it lost it. Now, it can gain it back tomorrow with an up day. We have to wait and see if that's going to be the case. But no matter what happens, you lost a good pattern. You now have a higher high and a lower low in an overbought market, support back at 113.67. British pound, this has been a rough market to try to get a handle on as it corrected from the upper Bollinger Band to the 18-day average and came from the lower band all the way to the upper in no time. And it's not trending. This whole rally was accompanied right there by a lower low and a higher high. And now what we're getting is we've had this break in the market, but all over the 18-day average where prices held. In the Japanese yen, you have lost the embedded reading that often, I wish I could say always, but that isn't the case, often leads to price in the 18-day average quickly coming together. I'm still expecting that. In the crude oil market, we've had a nice little rally here, and I think that's important to note. And as long as the market wants to continue that way, terrific. The market's got a price pressure here as you're still coming up in momentum. The pattern is one of higher lows and higher highs. With today's action, unfortunately, you did create a pattern right here of the lower lows, but there's nothing bearish. The overall pattern is still higher high, higher lows until the market does something bad. If it takes out 46, 48, it reasserts that pattern, but I'm only looking for the 4,700 level in this market. The IEA has come out and said that it still sees pressure on the markets for higher prices because of use in America and so on and so forth. I think the key to the market is the upcoming special meeting of OPEC to trim back production from Libya and Nigeria. That is very important. In the gasoline market, it's summer. It's hard to be that bearish on the market. The pattern is higher lows. You've had the higher highs, but you are very overbought here. Nothing special going on. And in the nat gas, prices, they're just not moving. They're not able to stay up or down. This has been an ugly chart pattern and one that is void of any lasting trend as we see it. Now, you see me talk all these words. What about the guide to these so that you better understand them? Modern Trader has a great guide that was put together, and we have two volumes, volumes 1 and 2. So this one covers the moving averages, the oscillators. The next guide is going to cover the Gann, the Fibonacci numbers, so on and so forth. They're yours free. They come as a PDF to you, 866-973-2077. You can go to our website at www.iraepstein.com. You can also click up here if you're watching me on YouTube. You'll see the icon there. Just click it. The form will appear. Or underneath us on many websites, you're going to see that it says, click here for Ira's free offers. Do so. Fill out the form. We'll put it in your hand. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.